All right, guys, in this video, we're going to talk about a company that had mixed results in the second quarter. They just reported second quarter revenue and EPS about a month ago, and they've fallen almost 12% since then. They are down quite a bit, 35, 40%, something like that in the last 3 months. I want to talk to you guys about SoFi in this video because I think right now is as close as we're going to get to a buying opportunity in the near term. Just my opinion. Stick around. Hey guys, welcome back to the channel. Thank you so much for joining me for another video. I'm Richard Allen. Happy that you're here with me. We're going to talk about SoFi in this video. Ticker symbol is SoFi, S-O-F-I. I hope you can spell that. We're going to talk about this company because they kind of had mixed results for the second quarter. Their EPS, they didn't deliver on EPS. In fact, they were 44 cents shy of where they expected to be. They expected, or Wall Street expected rather, a 4-cent per share loss, and they delivered a 48-cent per share loss. So a much bigger loss than what they thought it to be. However, revenue soared by 101%. So they delivered on revenues, and adjusted net revenues actually jumped by 74% as well. So they delivered like crazy on revenue, but they missed on EPS. So they weren't as profitable as they were hoping they would be. And that was for a number of factors. Now, since then, since they announced second quarter earnings, they fell quite a bit. They fell almost 10% or 12% rather since then. And they've fallen, let's take a peek at the charts here. They've fallen over the past 3 months here. They are down 32% because just not that long ago, they were like a $24 per share stock, and now they're trading at about $15.40 per share after hours. So I think based on this price action, it is a buying opportunity right now. Now, if we take a peek at what the analysts have to say about SoFi Technologies, ticker symbol SOFI, they were actually up 6.55% today in normal trading. But this is a strong buy based on 4 analyst ratings with an average upside of almost 58%. And all they have to do is get back to where they were not that long ago in June and July. So not that far off from where we are. But we have some really good analysts giving this some fantastic upside. We have a 5-star analyst, all 5-star and 4-star analysts here saying, look, this has a 50 to 80% upside. There is Timothy here from Credit Suisse giving it a hold rating with still an upside of around 7%. And that was initiated 8 days ago. Let me know what you think about SoFi. This was a SPAC last year. It was a big SPAC. A lot of people were really excited about it. I did some trading on it as well. This was one of the Chamath Palihapitiya SPACs, along with a lot of others like Clove and Open Door and Virgin Galactic were the most popular ones. So I really like this company long term. I want to talk about what one of the analysts, the last analyst from Mizuho Securities here, has to say about where he thinks the future is for SoFi, and then you can decide whether or not you think it's a good buying opportunity right now. So we have Dan Dolev saying, look, he believes that SoFi is in the midst of a transition to a full-fledged bank. Elaborating more on this, the analyst pointed out that in the fiscal year 2020, the company generated 83% of its sales from student, personal loans, and mortgage originations. However, Dolev expects that the company's sales mix will shift towards neo-banking services such as mobile-first cash management, trading and brokerage, robo-advisory, and crypto services. He expects that 30 to 35% of sales by 2025 will be from those services, as well as next-gen issuer processing, and he expects 25% of sales will be towards that. So as long as they continue to generate a similar amount of revenue from their loan originations, personal loans, mortgage origination as well, and they add to their services right now because they have a pretty sticky customer base. Their customers tend to stick with them for a long time. Let's say you have a student loan through SoFi, you may jump on and say, you know what, I might as well bank with them as well if they're offering that kind of stuff. And they offer a lot of different services like the trading and brokerage. They offer that service very similar to what Robinhood does. Now, they also have a product called Galileo. Robinhood actually runs on the back of that product. Credit Karma does as well. And those are probably two apps that you probably use in your everyday life. And that's run off some of the SoFi technology, which is pretty cool. So guys, let me know what you think about SoFi. Do you like SoFi going forward? I really do. I think in the short term we're going to see some movement as well once we break above this like $16 range or something like that. I think it's going to get back up to $18 pretty quick, but that's just me being a swing trader and looking at the charts. So I think SoFi is gonna run a little bit. Kathy Wood actually jumped on the bandwagon and said, look, growth stocks are where it's going to be at soon. Now, Kathy, in a lot of people's eyes, has fallen off recently. But remember, her ARK ETF or her innovation ETF was the #1 ETF in the U.S. last year. So kind of keep that in mind. I don't think she's fallen off that much just because the stock market is taking a breather after having such a fantastic year in growth and tech last year, and genomics really across the board. A lot of industries did really well. But Kathy Wood thinks it's time for growth stocks to come back. And I think I agree, because as the economy starts shifting back towards issues with the Delta variant and higher unemployment and stuff like that, then that's when growth kind of starts to kick in again. So I could see this being part of that wave, because especially since it's down still 12% in the past month or so. So guys, thank you so much for joining me for this video. Please like and subscribe down below, and I'll see you in the next one.